Hey everyone, and welcome. Today, we are diving deep into a guide for investing in America's absolute biggest companies, the titans that really truly shape our economy and, let's be honest, our daily lives. So, the big question is, how can you, as an investor, get a piece of their massive success? Well, let's break it all down. To really get a sense of the scale we're talking about here, just look at this number: $9.242 trillion. That's not a typo. As of early April 2025, that was the combined value of just 3 companies in the US: Apple, Nvidia, and Microsoft. It's an incredible amount of value, and it just goes to show you the sheer dominance of the giants we're exploring today. So that leads to the million-dollar question, right? For the average person, how do you even begin to get a piece of that action? I mean, buying shares in all of them one by one sounds, well, complicated and pretty expensive. Is there a simpler, more direct way to invest in these economic powerhouses? You bet there is, and that's exactly what we're going to get into. But hold on, before we jump into the how, we've really got to nail down the why. Why is betting on these massive established companies such a solid strategy for so many people? Understanding the logic behind it all is really the first step to investing with real confidence. And this right here really lays out all the core advantages. When you invest in these giants, you're getting stability. These are companies with proven track records and really strong financials. But hey, it's not just about playing it safe. They also have massive growth potential because they pour billions into innovation. Plus, with their global operations and the potential for dividends, it's just a really powerful mix for any investment portfolio. All right, so you're on board with the why. Now for the fun part, the how. What's the most practical, most accessible way for someone to get in on all these top companies without the massive headache of trying to manage dozens of different stocks? Okay, for most people, the answer is right here: an S&P 500 index fund. So the S&P 500 is basically a list that tracks 500 of the biggest companies in the US. But here's the most important part. The index is weighted by size. That means the biggest companies, the very ones we're talking about, make up the biggest slice of the pie. So by investing in just one single fund, you are automatically and heavily invested in all of these titans. And this slide illustrates the difference perfectly. You could go out and buy individual stocks, but that means doing deep research on every single company and constantly trying to keep your portfolio balanced. It's a ton of effort, and the risk for each stock is much higher. On the other hand, you have an S&P 500 ETF. That's an exchange-traded fund. It gives you instant diversification across 500 companies. It's low cost, super simple to buy, and you're essentially just riding the wave of the entire US market. And to make this super concrete for you, here are 3 of the most popular S&P 500 ETFs out there. You can just look them up in any brokerage account with their ticker symbols: SPY, IVV, and VOO. They all pretty much do the same thing: track the S&P 500, though they might have some tiny differences in their fees. Now, let's level up a bit. Beyond just buying an index, it really helps to think like some of the world's best investors. And that brings us to this really powerful idea that helps explain why these top companies stay on top for so long. It's called the economic moat, a term that the legendary Warren Buffett made famous. The idea is so simple, but it's also profound. The very best businesses have a protective barrier around them, like a moat around a castle, that keeps all the competitors out. This moat is what lets a company fight off rivals and keep making huge profits year after year. It's really the secret sauce to their long-term dominance. So what does a moat actually look like in the real world? Well, you see it every day. It can be a brand that's so strong, like Apple, that people will literally line up to pay a premium for their stuff. It can be a massive cost advantage, like how Walmart can offer lower prices than anyone else because of its huge scale. Or think about high switching costs. Imagine how hard it would be for a big company to switch away from Microsoft software. These are the kinds of advantages that build value that lasts. Okay, so let's pull all this theory down to earth and look at some real-world numbers. By taking a quick snapshot of the market from April 3rd, 2025, we can see which of these dominant, moat-protected companies analysts were really liking, and more importantly, get a feel for the giants you'd be investing in through an index fund. So on this one particular day, these were the top 5 titans by size. And yeah, it's interesting to see the different analyst ratings, but don't forget the main strategy here. When you own an S&P 500 ETF, you own all of them. It's their collective performance that matters, not the daily rating of any one company. This just gives you a sense of the heavyweights that are driving a huge chunk of your fund's value. And to drive that point home, these were some of the companies in the top 25 that analysts felt had the strongest potential on that day. And while it's kind of cool to see which names are favored, it just reinforces the main benefit of an index fund. You automatically own the winners without having to guess who they're going to be ahead of time. You get a piece of all these potential high flyers. At the end of the day, this whole strategy really just requires the right mindset. And that brings us to this timeless piece of wisdom from Warren Buffett himself. The stock market is a device for transferring money from the impatient to the patient. It's just a powerful reminder that building wealth with these amazing companies is a marathon, not a sprint. So, there you have it. We've covered the what, investing in America's top companies, and we've covered the how, using simple, powerful tools like S&P 500 ETFs. And that leaves us with the final and most personal question of all. Now that you have the knowledge, when will you decide to put it into action?